Taiwan's stock market and currency are under strain from higher global interest rates and inflation. The TAIEX, the index which tracks companies listed on Taipei Stock Exchange, has fallen from an all-time high of over 18,000 in January to below 14,400 in early July. That's a drop of over 20%. More than $34 billion flow out of Taiwan's stocks in the first half of this year. Meanwhile, Taiwan's currency is weakening too. $1 was worth about 27.5 Taiwan dollars in January, but it's now nearly 30 Taiwan dollars. To find out more about what's behind Taiwan's stock slump, our reporter James Chater spoke to Peter Kurz, Chief Strategy Officer at QIC, an investor advisory firm based in Taipei.
Taiwan's stock index has fallen 20% since the beginning of this year. What's driving this trend and what impact does it have on Taiwanese companies?
Taiwan equities have been falling in line with much of the rest of the world. And the rest of the world is falling quite simply because of the inflection in global central bank monetary policies, led perhaps by the Fed in the US, but reflected globally. So it's basically a natural monetary cycle. And the impact to corporate Taiwan is minimal, really. And certainly the leading sector of the Taiwan market, the electronic sector, tends to be very cash rich. And so the impact is minimal.
And how long is this trend set to continue? Is it as simple as saying, the pace of this trend is pegged to the pace of US Federal Reserve interest rate hikes?
If you look at sentiment indicators, put-call ratios, or institutional equity versus cash weightings, these are all also suggesting that the market is reaching maximum bearishness and that equities may not have that much further to fall. But I would guess that by the end of the year, we'll be finding a bottom in equities. That said, I don't think we'll be finding a bottom in the economy. And yet we know that equity markets anticipate economic conditions. And we also know that we don't know we're in a recession until long after we are in a recession, because we don't get the GDP data until several months later. And so I suspect that we'll be seeing markets bottom, but start getting some more negative economic data coming out by fourth quarter this year and first quarter next year.
The Taiwan dollar has fallen significantly on the US dollar in the first half of this year. How does this trend relate to the policy divergence that we see in Taiwan hiking interest rates at a slower pace than the US Federal Reserve? And do you think Taiwan should increase the pace of the interest rate hikes?
US interest rates tend to be far more volatile and typically higher than Taiwan rates. And so it doesn't make sense from a historical context for Taiwan to try to meet US rate hikes point for point. But certainly to the extent that we let the NT dollar fall any further, it will increase the inflationary pressure to Taiwanese consumers. It will also increase the cost of capital equipment for obviously the more capital intensive industries, but certainly semiconductors are first among them, and reduce their competitiveness in the global arena.